Okay, imagine this. You've got this super advanced automated trading system, and for 2 days straight, it's perfect. Like 100% profitable trades.
Wow.
Every single one a winner. You'd think, okay, time to pop the champagne, right?
Absolutely. Peak performance.
But no. After this incredible streak, it actually issues itself a warning, a really stark warning about its own success. Call it a warning, not just a victory.
Yeah, that's counterintuitive.
Isn't it? And that's the kind of mind-bending scenario we're diving into today. We're looking at Althea Core V4.0, this really sophisticated trading system.
Right.
We'll unpack its, quote, flawless execution
Right.
on September 10th and 11th, 2025. But then the really juicy part, we'll dissect this critical perfection warning it generated.
And how that warning completely changed its game plan for the next day, September 12th.
Exactly. Shows this incredible self-awareness.
It really does. And, our mission here is to try and understand this paradox of success. It's not just about the amazing trades, though they were amazing.
Oh,
It's more about the system's ability to look at itself critically and then adapt. So we need to explore the market conditions that allowed it, sure, but also the risk protocols it kicked in when it saw that mean reversion potentially coming.
okay, so let's paint the picture. September 10th and 11th, 2025. Alpha Core V4.0 is running in what it calls balanced hunter mode.
Mm-hmm. Part of its OMNI profit nexus framework.
Right. And like we said, it was on an absolute tear. The system itself logged it as flawless execution under optimal conditions.
So the stars aligned, basically,
Pretty much. And the
Yeah.
numbers, I mean, they're pretty staggering. 100% win rate
across everything.
across all trades, both days. Just on the 11th, it pulled in over $277 gross profit from 10 trades. That averages out to something like, what, 15.3% return per trade.
That's huge for short-term trading.
And get this, it did all of that in just 28 minutes, right at the market open. Super quick, super precise.
Surgical.
Totally. And its rolling averages were booming. Almost a 10% daily equity gain. Weekly performance shot up to plus 39%. And it even pushed the monthly number into the green. The account grew like 14.6% in just those 2 days.
That performance, it really showcases what the system calls dynamic discipline
Yeah.
and that efficient profit extraction. This wasn't random luck. It was clearly a very methodical approach, identifying and hitting those specific opportunities, very systematic.
Okay, but here's where it gets like really weird and interesting. How on earth could perfect performance be a warning? It feels wrong.
It absolutely does.
But the system explicitly flagged it. A warning, not just a victory. It said this perfection signaled peak efficiency before degradation. It was anticipating statistical variance, mean reversion.
Basically saying this is too good to last.
Exactly. It was telling itself you're performing too well, and that's statistically suspicious.
And that really is the core paradox, isn't it?
Yeah.
It raises that fundamental question, why predict a downturn right when you're at the absolute peak? And the answer is that statistical concept, mean reversion. You explained it well. It's like stretching a rubber band. Performance, especially extreme performance, tends to snap back towards the average over time.
Right.
The system, being analytical, recognized this unbroken perfect streak was an outlier, statistically just unsustainable. It knew a period of, less stellar results, or at least more average results was probably next. It was anticipating gravity in a way.
So what were these market conditions? What created this perfect storm for profit?
Well, on September 11th, the overall market vibe was aggressive bullish, definitely risk on.
Okay.
The system itself called it the highest conviction setup it had encountered, and this was driven by what it calls a perfect 44 cask alignment. CAS, that's cross-asset sentiment and catalyst.
So all 4 key indicators line up.
Perfectly, yeah. Let's break that down quickly. First, you had SPY, the S&P 500 ETF, the market anchor,
Right.
is in breakout confirmed mode, testing a big psychological level around $657 after breaking through resistance, and crucially, on strong institutional volume. Okay, so big money was buying.
Then you had TSLA, Tesla, acting as the amplifier. It had this explosive breakout, shot up past $355, almost hit $360 that morning. Huge volume.
Tesla doing Tesla thing.
Totally. And it triggered what they call a Tier 3 gamma ignition. Basically a feedback loop, making options prices accelerate like crazy. Now, lots of traders might get FOMO there.
Oh, absolutely. Chase it too high.
Right. But the system was disciplined. It captured its plus 47% profit on the calls it held and got out. No chasing.
Smart.
Third, BTC Bitcoin, the gatekeeper. It was holding strong above 114K, a key institutional level that confirmed the broader risk-on mood. Plus, you had big inflows into Bitcoin ETFs that day.
Okay, so crypto is bullish too, confirming the sentiment.
Exactly. And finally, the VIX, the volatility index, the fragility governor, it was way down. Suppression confirmed below 15, super low volatility.
Which is actually good for certain option strategies.
Precisely. It created perfect conditions for convexity capture, where those option prices can really take off. And just to add fuel to the fire, the 8:30 a.m. CPI data came in showing inflation was cooling. The market just ate it up. No fear spike at all.
So putting it all together, this highest conviction setup, it basically meant every major signal was flashing green, all pointing bullishly in the same direction.
Yeah.
It created just an ideal hunting ground for the system strategies, especially for capturing that convexity where small stock moves can generate those really outsized option gains. Because volatility was pinned so low, it was like having a tailwind from everywhere.
And yet, even with everything looking perfect, AlphaCore V4.0 was digging deeper. It found these subtle but really critical red flags, these fragility signals. It wasn't buying into the hype completely.
That's the impressive part, seeing beyond the green numbers.
Definitely.
Yeah.
So what were these signs? Well, it noted some afternoon fade signals from the day before, September 10th. Things started strong but didn't hold.
Okay, weakness under the surface.
Also, it saw institutional distribution in SPY. Even though the price was up, big money was actually net selling over $1.6 billion flowed out on the 11th. A sell the rips kind of bias.
Interesting. So institutions weren't chasing the breakout.
Seems like it. Then there was a BTC ETF spot misalignment. The ETF looked strong, but the actual Bitcoin spot price was kind of softening, a slight disconnect.
The divergence.
And like we keep saying, the 100% win rate itself, just statistically weird, concerning even.
Yeah, red flag in itself.
For TSLA, specifically its RSI, the Relative Strength Index, was way up at 76.7. Classic overbought territory. That creates air pocket risk possibility of a sharp drop.
Right, stretched too thin.
Plus, the VIX being so low, ultra compressed. Historically, that usually leads to a big directional move up or down pretty quickly, like within a day or two.
Like a coiled spring.
Exactly. And finally, really high correlation across different assets, like 0.76 to 0.88. When everything moves together like that, diversification doesn't help much. Risk gets concentrated.
That's a really key point. Limits your safety net. You know, this ability to look past the immediate wins and spot those underlying weaknesses, that's real critical thinking by the system.
It is.
For us, as learners watching this, it's a huge reminder, right? Don't get carried away by the good times. Always question, always look for those hidden cracks, even when the surface looks perfectly smooth.
So true. Okay, so it sees the perfect performance. It sees the fragility signals.
Yeah.
What does it do? How did AlphaCore V4.0 actually change its plan for Friday, September 12th? Because it made some major shifts.
It didn't just tweak things, did it?
No, not at all. It went into what it explicitly called a post-perfection defense mode. The priority flipped. Preservation first, convexity second. That's a big change in mindset.
Survival mode kicks in.
Pretty much. And it took immediate, really strong actions. First, aggressive profit banking. Mandatory. Like transfer 50% of the recent gains out. Lock it down.
Smart. Take money off the table.
Second, reduced position sizing. Slashed normal size by about 30% for the next day. Max size per position dropped from 5% of capital down to 3.5%. Total market exposure capped way lower at 12% instead of 18%.
Pulling back exposure significantly.
Third, cash discipline. Keep a big chunk of cash on hand, 44% reserve. Called it a mean reversion buffer. Basically, dry powder for defense or if things get choppy.
A cushion. Makes sense.
Fourth, tighten stop losses. Standard stop loss tightened to minus 20% per contract. But for those super volatile TSLA 0 DTE options, even tighter, like minus 15 to minus 20%.
Cutting losses faster on the riskiest plays.
And fifth, time discipline. This was non-negotiable. A mandatory auto exit for all 0 DTE positions by 3:00 p.m. ET. No holding into the close, no overnight risk on those.
Wow, so really clamping down on risk across the board. Size, stops, time.
The whole 9 yards.
You know, that adaptability is key. It's recognizing that, yeah, you won big yesterday, but that doesn't mean you bet bigger tomorrow. In fact, it might mean the opposite.
Right.
It's about playing the long game, survival, that foresight, that self-correction. That's really advanced stuff.
So let's get specific. How did these defensive rules translate into the actual trading plan for Friday the 12th, asset by asset?
Yeah, how did it approach SPY TSLA?
Okay, so for SPY, the anchor, it still had a slight call bias, expected it to maybe drift up, but it had a very clear plan B. If SPY dropped below a certain level, flip immediately to defensive put positions. It also expected potential chop around that $657, $658 zone.
So cautious optimism, but ready to defend.
Exactly. Now, TSLA, the amplifier, this is where a major tactical shift happened. Remember, it had those longer dated calls?
Yeah.
It ditched that plan, switched entirely to September 12th expiry options.
Yeah.
Made TSLA purely in 0DTE scalper amplifier.
Whoa. Okay, so using that extreme volatility for super short-term plays only. Higher risk, but shorter duration.
Precisely. Higher risk, higher potential reward, but managed with extremely tight rules. Still a call bias, but with those special 0DTE risk rules, tiny allocation per contract, 1.5% max, that mandatory 3 p.m. exit, and the super tight stop loss.
Very specific handling for a very specific instrument.
Then BTC ETF, the gatekeeper. That remained a call bias. The system actually saw it as the strongest swing candidate because its options pricing seemed very complacent.
Meaning the options seem too cheap relative to the potential move.
Yeah, suggesting an asymmetric convexity edge.
Right.
More upside potential than downside risk, statistically. But again, a contingency.
Yeah.
Get out if spot Bitcoin drops below a key level.
Okay, so still looking for opportunity there, but with a clear exit strategy.
And finally, VIX, the fragility governor.
Yeah.
Still super low, around 14.7. So the system decided no immediate hedge was needed.
Right. Don't pay for insurance you don't need yet.
It set a tripwire. If VIX spiked above 16.5, that would trigger immediate hedging, and the ultimate kill switch was armed. If SPY tanks below $640 and VIX explodes above 18, flatten everything. Get out. Full stop.
That's a comprehensive, multi-layered defensive posture.
Isn't it?
What strikes me is how nuanced it is for each asset. It understands SPY behaves differently than TSLA, which behaves differently than Bitcoin or VIX.
Yeah.
And that TSLA 0DTE switch, that shows a really deep grasp of using a high gamma beast like that as a scalpel, not a sledgehammer. Very short, sharp bursts. That's sophisticated risk management right there.
Okay, so the stage is set. Defensive mode engaged, specific plans for each asset, super tight rules, especially for TSLA 0DTEs.
Yeah.
How did Friday morning, September 12th, actually play out after the perfection warning? Did the system stick to the plan? Did it wobble?
Yeah, the moment of truth. Right.
Right. Well, the system focused only on TSLA 0DTE calls. Nothing else.
Laser focus.
And the entire trading session lasted just 27 minutes, from 9:30 a.m. to 9:57 a.m. Eastern.
In and out fast.
And the result? It executed a perfect 55 green scalp cycle.
Still perfect, even in defense mode.
Still perfect on the execution for that short window. All 5 quick scalp trades were winners. Pulled in returns like almost 13%, over 17%, 16%, nearly 7%, almost 9% on those 5 trades.
Wow, so it found opportunities even within its tight constraints.
It did, because TSLA itself just exploded that morning, went from 370 up to 384, a big 4% move. That provided the localized convexity it needed.
Ah, okay. So TSLA delivered the volatility.
Exactly. Meanwhile, SPY kind of stalled around that 657, 658 magnet zone we talked about. BTC was just sideways, so the anchoring gatekeepers were neutral. VIX stayed low.
So the opportunity was isolated in TSLA, and it hit it.
Nailed it. With, and this is key, textbook balanced hunter discipline. Took profits in stages, ladder games got out fast, ended the session and the week completely flat, full cash. Zero capital left at risk. It perfectly avoided that extension risk of holding on too long.
You know, connecting that back, it shows the power of listening to its own warning.
Yeah.
Even though TSLA was ripping higher, offering temptation, it stuck to the defensive, fast in, fast out scalp plan. Preserved capital, followed the rules. That discipline, even when things look good for a moment, that's often the difference maker. Sometimes the best trade is the one you don't overstay.
Absolutely. Yeah. So let's try and tie this all together. What's the real edge here? What makes a system like AlphaCore v4.0 tick? And what's behind this incredible adaptability?
It seems like it's more than just picking winners.
Much more. The system report itself says its true edge is time arbitrage, not direction picking.
Time arbitrage. What does that mean exactly?
It means exploiting predictable windows of activity, like that early morning slot, maybe 9.3 EO to 10.C or 11:30 AM, where you often get institutional rebalancing meets retail FOMO.
Predictable patterns in when activity happens.
Exactly. It gets in during that high momentum window, does its thing, and then gets out before the afternoon when different algorithms often kick in and cause more midday chop or sideways action. It identified a specific 10.000, 11.000 AM sweet spot for peak momentum.
So it's playing the clock as much as the price chart.
Seems like it. And this whole operation, it's not just one program, it's this multi-layered architecture. Think of it like different departments in a company, each with a specialty. You've got the OMNI Profit Nexus at the top, the overall framework, the validator ensuring dynamic discipline. Then AlphaCore v4.0 itself, the main system doing the live trading and analysis.
Right.
Then there's Dota's v2.0 dynamic options and tactical analysis system. That provides the market intelligence, figures out the market regime, confirms volume signals.
Intel division.
Kind of. Then the Ultimate Engine, running in balanced hunter mode, synthesizes all that data, comes up with the tactical plans, guides the money allocation.
No strategist.
Yep. The CN-Terra-C model is the quant engine, doing the cross-asset analysis we talked about. And finally, the Apex Options trading engine is the one actually hitting the buttons, placing the trades based on the strategies.
Wow. So it's a whole ecosystem working together.
It really is.
You know, that raises a big question for us humans trying to learn from this. What's the takeaway?
Yeah.
It seems to be this blend, right? Sophisticated analysis, yes, but combined with that strict self-awareness, that disciplined execution, all running on a really robust, layered structure. That's what seems to make it elite, as the system calls itself. That's what allows it to survive, maybe even thrive, when things inevitably get hostile. It teaches us that knowing when to step back, when to be cautious, is just as vital, maybe even more vital, than knowing when to attack. It's about longevity.
What a journey from that incredible, flawless execution run.
Yeah, the 10th and 11th.
Through that really profound, almost philosophical perfection warning.
Which led to the big shift.
To the strategic pivot into post-perfection defense mode, and then seeing that disciplined scalping on the 12th, it's just a masterclass in automated self-awareness and adaptation.
It really is. And maybe the ultimate lesson here from AlphaCore v4.0 is that real intelligence, whether it's artificial or human, isn't just about spotting the opportunity.
Yeah.
It's also about deeply understanding and respecting your own limits, and the limits imposed by statistical reality, that ebb and flow. For you listening, the takeaway might be that constant adaptation, that disciplined self-awareness. Those are crucial skills, whether you're managing millions in a portfolio or just trying to manage the fire hose of information we all face every day.
That's a great final thought. So for everyone listening, what part of this Alpha Core story, the perfection warning, the defensive shift, the time arbitrage, what resonated most with you? We'd love to hear your thoughts.